So, Jim, what do you think? What do you think about the market action this week and the close on the gold and silver spot price?
The close was terrible. Remember 2 weeks ago on a Monday, we were up 9% in the silver. Nice big day. In 2 weeks, we've taken it all away. And it did not, people can blame the dollar, but the dollar hasn't changed very much in a week. Certainly didn't, it changed a little bit more in 2 weeks, but not significantly. It was just gold and silver getting just pummeled. Silver is down like 8 days, 7 days in a row, something like that. Chart doesn't look good. I hope we hold here.
Yeah, I will say that my opinion here on the daily and weekly time frame is that it did get killed, and you did put in some pretty ugly candles to finish the week. But you technically haven't made lower lows yet. You're still technically on an incline in price since the 1st of September. So that's encouraging. There are some small bullish divergences here on the short-term time frame. So, maybe we get a small bounce. Maybe it doesn't amount to much, but I would agree. Definitely the momentum right now is to the downside. Gold itself, it's lost that 20-year trend again, but it also has not set new lows yet. It feels like the markets broadly are kind of getting ready to roll over here, and it's not going to be a surprise. We've been looking forward to it, right? That if we got this big market sell-off, gold and silver are going to go down too at first. I mean, they always have in the past. So we could be setting up for something like that, right?
Yeah, the other thing, Liberty, is that everybody on Twitter, and there's a guy that follows it, it's Mike Say, I think 98. He follows the inventory, but the LBMA inventories are going down. The COMEX inventories are going down. It sounds like premiums have gone up in this past week on some products that some people have, mentioned on Twitter. And it's just odd behavior that the price is coming down while things are tightening up. It's odd.
It is. And we talked about this in the prior space earlier in the week. So when I bought that kilo that I had talked about, the premium was just over 10%. I remember that well. And once silver took off on that run, it went up, 9% in a day. The premiums actually dropped a little bit. They got under 10%. And now that the sell-off has occurred again, I'm looking right now, findbullionprices.com. You'll get the cheapest by weight and size. The smallest premium right now is on a 100-ounce bar, and it's 15.6%. So premiums have gone up by 50% since just 2 weeks ago. So it is a lot.
I read one man on Twitter say that the American Eagle premium was more than the spot price. It was $19.80 or something. I don't remember who the seller, who the vendor was at that point, but I think he said it was $19.80 over, and the spot price was less than $19.80. Awfully, just odd, crazy stuff.
Yeah, I'm looking right here. If you go to JM Bullion for one random year Eagle, your lowest price is going to be $37.43. So yeah, it essentially is double. That's insane. So the silver ask $18.53. So yeah, it's $20 premium for the Eagle. And that's if you buy one. If you buy 1,500 of them, it gets down to $35. But and, it is crazy too, because obviously something definitely is going on, because like you said, you're seeing more and more reports of all of the withdrawals, more people standing for delivery, et cetera, et cetera. You're seeing all the lines in all of these countries around the world. You're hearing about all of the banks running out of silver. Now we have guests on in here and other spaces from Canada and other places saying that, they're having a hard time now finding the physical in stock, and they're already out of the most common sizes and weights. I don't want to get ahead of myself or anything, because it's easy to do, but it just doesn't feel like a coincidence that this is all happening, at the same time everything else is happening in the macro, and this breakdown and this debt crisis and these interest rates and, these these banks getting margin called and Credit Suisse and everything's just happening at the same time. What's up, Alex? What's up, buddy?
Yeah, I mean, when was the last time you? I know it's been a long time since it's been taken out of money, but like, when was the last time you saw circulating, you know, coins that with silver in them? Because I mean, you used to see it every once in a while, but the easy, the fruit or whatever, the low hanging fruit's been picked. I mean, people that had weak hands, it's gone. It's there's no one selling right now. I mean, I don't see people like with gold, like sell your gold here, kind of signs up, and like it just doesn't exist. I mean, I think all the weak hands are done with.
I agree with that, man. I don't know why on earth you would be possibly selling right now. I think you're right that this is a what do you call it? I guess a seller's market, right? Because everybody wants to buy. So it is interesting, like Jim said, these premiums have shot back up now. It's essentially a 100% premium, a slightly more than 100% premium on a Silver Eagle. I'm going to see if I can sort that by coin here to see what the cheapest premium is on a Silver Eagle. But that's insane. That's insane to pay a 100% premium on an Eagle. That's just nuts. I don't know.
So my understanding is we may be coming into like a seasonal thing, just making it worse than it should. I believe a lot of the mints are starting to shift over to their 2023 designs right now. And it happened to coincide with this like a huge spike in demand. So it's conceivable that these premiums are going to come back down in a month or two. But then again, if you're the dealer and you're selling it this quick, like even if you have more supply, why would you bring your prices down? Unless your competition does, you're not going to do it. So it's a toss-up. I wouldn't say it's a lock that premiums aren't coming down a little bit, just because more is going to be coming out of the mints in a couple months.
So the cheapest premium that I can find is for a cold or damaged coin that's on Monument Metals, and it has a 70% premium. Okay, if you want a random year on Bullion Max, it's a 75% premium at $14 a coin. And then beyond that, you have to go to eBay, where the lowest premium is 90% at $16.50. So, good grief. That's, Mm-mm. So what, Austin, when you were there with the Palisades space the other day, and so were you, Jim, did you guys pick up anything? I had to get kind of off and on from Bob, and Bob and Rocco. They were talking a lot about the physical market and what's going on in there. Do you guys have any takeaways from that conversation?
The Bob spent a lot of time on two of the ETFs, and I don't do those ETFs, so I don't. I listened to what he had to say, but part of it went over my head a little bit. I did ask one question to him, and I said, if those authorized participants, if they can. Bob was talking about how they trade shares for metal or trade metal for shares, that kind of thing. And I asked him, I said, could they, I said, I used the word manipulate. He kind of cautioned me. He said, well, I think that they could influence the price a little bit. So, and the authorized participants, I believe, are big banks. So that they can make shares, create shares, or, put metal in and get shares, that kind of thing. If anybody wants to listen to it, it's I think it's about 2 hours long, and it was the Palisades Spaces, and Steve St. Angelo, he talked again that how the metals can actually. I think he was talking about silver specifically. He said it can act as a proxy for a store of energy value, and that made sense to me. It takes a lot of energy to dig the rock out of the ground and process it. And I watched Parker Schnabel and Tony Beats last night, and I kind of thought a little bit about what Steve St. Angelo was saying. One time, I think probably 2 seasons ago, Parker did mention how much the energy component was for his costs, and I think it's one of the biggest costs.
Yeah,
So,
about the same. I had to hop off and on because it was still in the workday a little bit. From whatever I caught, like a lot of it was just kind of debating the two ETFs. I guess to me, it's like it's just a topic I've heard so much. I'm just not necessarily interested in it. I'm not saying it's not important. I'm just like kind of tired of debating SLV versus PSLV at a certain point, right? I have my opinions. Other than
Yeah,
that,
me
I feel
too.
like it kind of just like it it it's a narrative that misses the script, right? Pricing is done in the futures market, not the ETFs, and it misses the script that we're talking about something that the world needs, the modern world needs to function, and demand is growing because of solar panels, EVs, a lot of other things, while supply is getting restricted. Like that's the story, that's the script, and to me, that's the interesting part here. But yeah, it's mostly it's on ETFs, and it's to me personally, I guess I just don't care about that debate anymore.
I agree with you, man. And plus part of it, it is fun to debate those kind of things, but I agree with you. Actually explained it very well. It's a narrative that misses the script, especially where we are in the timeline. I mean, we're so beyond that kind of stuff to me in my eyes. It's like, dude, we're kind of like at the beginning of the end game here. I feel like we have bigger fish to fry, you might say. Even though it is all important, I mean, people do have to decide where to invest their money. I mean, especially if you have new people coming in, I guess I can appreciate that, especially for the new people. If anybody needs help, it is the new people. Yeah, I can see that. Go for that. Hey, Hutch, what's up, buddy? Feel free to go ahead.
Yeah, and I know you guys are kind of sick of it, but I miss that space, and I was just hoping for the TLDR because apparently I've come to believe that PSLV is the better ETF, and I've since taken measures to set up a self-directed 401k, and I'm trying to shift my exposure from ETFs to physical in that, but it's taking some time, and so I want to maintain my exposure. But I didn't know if you guys had the TLDR. Too long didn't read on which one is better, right? Or just what those guys were saying anyway.
I think the consensus was PSLV, right? I think it's the better instrument for retirement and like an IRA kind of thing, if I'm not mistaken. I don't know. I'm not the expert on that stuff, but me personally, I would choose PSLV. First of all, I don't want anything to do with anything JP Morgan manages. It's like I don't want anything to do with those criminals. I know I can at least believe in Sprott and believe that they have the silver that they say they have, and it's all backed and legitimate. And I have a feeling that might mean something one day. All that silver that they're stocking up. But that's just my personal preference. I think it's a great way when you're someone like me or plenty of people who may already have enough physical. You've already bought enough, but you really can't help but buy more. Maybe PSLV is a great way to get access to more physical because you don't pay that premium. Hell, a lot of times you get to get them at a discount, especially if the market sells off. You can buy them at a 5% discount. I mean, that's a great deal, honestly, a lot of times. Go ahead, Jim.
Hutch, I wanted to just make you aware that one of the participants in that spaces, the Palisades spaces, was Happy Hawaiian. You may have heard of him, and maybe you know of him. And he was talking about the discounts in the net asset value. I believe he was talking about both. And I think I don't want to speak for him, but if I remember him correctly, he was saying if you're going to hold metal, or if your desire is to hold metal for 5 years, 10 years, something like that, he said, if you're never going to sell, some people feel that way, they're going to hand it down to their family. His opinion was to hold the physical because as the net asset values come down a little bit, the discounts come down a little bit, it's actually costing you more with the the annual service charge or maintenance charge or management charge. So if you did
Sure.
want to, I guess if you did want to go back and listen, kind of try and listen for Happy Hawaiian's remarks. He talked, I think, for several minutes, not 20 or 25, but several. And you might get, I know that you know more about it than than I do. I'm a futures guy, but I thought that I'd just give you that tip.
No, I appreciate it, and I think I will go back and listen to it. And I agree with you guys. Like I'm trying to stack more physical, but for those people that are new, or they just don't have enough cash flow after tax, whatever from income cash flow, but they have IRA money. It's still a legitimate interest to go ahead and get some exposure while you're waiting to dollar cost average into the physical. And that's really what I'm trying to do right now with it. And so I agree it's an inferior product, let's just say. And if, I've done a couple calls with Jim now, and he's very, very knowledgeable with futures, and actually introduced him to one of my clients, and the call went really, really well. It's just, that's a big game. You have to be prepared to have exposure to, $100,000 of silver at a time. So I think the ETF products for, just the people that are hearing about silver squeeze and want to get involved and want to kind of build their exposure, I think the products are viable. So I definitely will listen to that.
Yeah, and to re-clarify that, I agree. Sprott PSLV, I think it's a really good product. I think like maybe where I get tired of the debate is just, you throw out any financial instrument, any stock, any ETF, you get enough smart people in a room that have differing opinions, you'll be able to throw mud all over them, right? You'll be able to pull out any tiny flaw or any possible way it could go wrong. And you end up just scaring everybody off from wanting to invest in what could be one of the best investment opportunities of the decade. Like, I kind of just left that space. I was like, if I was new to this space, I wouldn't be helped. I would be scared shitless from owning any of this right now. Because it's like you get into a point where everybody's trying to win the argument and you start blowing up things that are very, very small. I think Sprott's a great product. So I just want to clarify that. I think it's a very good instrument.
Cool. Thanks.
Yeah, right on. So meanwhile, a lot more is breaking down and happening in the broad market, in the macro. It looks like potentially Credit Suisse was bailed out or helped. Certainly, the Swiss National Bank needed a cumulative total of $9 billion in overnight emergency funding, and you have to speculate as to what that could have been needed for. And the kind of not too obvious answer here is Credit Suisse. And so I had made a post earlier, and it kind of begged the question to me that really says, it's like, look, let's assume that that's what happened. Let's assume that Credit Suisse was rolling over. They needed this emergency capital to help stave off something bigger. Well, if the Fed is at this point where they are bailing out institutions, if we have already reached the point of contagion and bailouts and fallout, right? And the Fed knows this, obviously, because they're the one sending the money, right? Then it stands to reason that they understand how critical things have become in these markets, right? And we see what's happening in England and the Bank of England. And so it tells me that we've gotten to a point here, if the Fed continues to hike, even though they know things are breaking down, then I'm starting to kind of go more along with this idea that, that the dollar's being weaponized. And it has a lot less to do with inflation. Inflation may be a bit more of a disguise to continue with the push here. And everybody believes it. This narrative is in play. And, again, just to kind of clarify this for you, you guys got to kind of forgive me here. If the Fed is bailing out Credit Suisse, if the Fed is sending this emergency money to these other banks, okay, because they know things are falling apart, and without this emergency liquidity, things would break down, contagion would unwind, and there would be a global fallout. If the Fed is doing this, understanding this is what's happening, and they continue to raise rates, then it means that they are doing it on purpose to bring about such a thing. It's like if you're torturing someone, right? And you want them to stay conscious throughout the whole thing, you get them a shot of adrenaline. I mean, that's kind of the equivalent of what they'd be doing. It's like they want to keep the host awake for as long as possible to get them, as much damage done as possible, all at the same time. It's like, why would you do that? It doesn't make any sense unless you have some other agenda, some other goal that you're reaching for, because obviously they're not slowing down inflation. We knew they couldn't. They never had the power to do this. And here we are. We're over 3% on the Fed funds rate. Inflation continues to increase. We knew this would happen. It has become so apparent that, kind of even the most novice investors can kind of see this now, right? And so they're kind of losing the narrative on how effective they are in this fight against inflation. So it really begs the question of what happens next. I mean, are they going to continue raising again, knowing damn good and well that what they're doing isn't doing anything about inflation whatsoever. All they're actually doing is nuking the economy, not just our economy, but especially the global economy, right? They're collapsing everything in what might be a controlled demolition. I mean, this might be what they're really going for. And I just get the feeling, guys, that when you kind of put these pieces together, all right, everything that's happening, especially this last week, Yellen came out and she's talking about the lack of liquidity in the bond market. They reached out to see if they needed to buy bonds. Okay. As all of this happens, if they continue to raise rates, I just don't understand how it could be anything other than an intentional demolition, right? A controlled burn to bring it all down at their own whim and at their own discretion. What do you guys think?
Yeah, Liberty, you and I have discussed this once before, and I think all of that's valid. Maybe let's throw out one other idea to get people's wheels turning and just trying to think about this from this, like, the Fed's perspective of what they could be trying to accomplish. So if you think back to 2019, people kind of forget about this because, like, it just other events happened. We were starting to slide into recession in 2019, right? The economic data did not look good. There's a very good chance if just COVID didn't come along, we were just going to have just your normal type of recession, right? And just because of COVID, we pumped so much money into this thing, we kind of delayed it and never had that recession. As we're going through this and that money's starting to get out of the system, it's starting to work its way through. It's possible that the Fed knows that recession that got delayed from 2019, just end of cycle, normal stuff, just how free market economies are supposed to work when you don't have an all-powerful overlord overseeing them, that they know that we're going to slide into this in 2023 anyways. So they could be looking at this, hey, let's just front load these things so we can show everybody that we're quote unquote doing something. Let's get them in as soon as we can before we think this thing's going to take a turn. Then we can announce a pause after we do another 75, maybe another 75, another 50. I don't know. Maybe they get to their 4.5 they have in the dot plot. Have a pause, get a spike in the market because everybody's so happy it's finally over. There's an end to this pain and whatnot. And then inflation will naturally come down with the recession. They'll have a few months of Goldilocks maybe in there. They can claim a soft landing, and then they make up some excuse on why the economy is going down now, and then they start cutting. They could just be still going for this Goldilocks.
All plausible. I mean, it's all good to think about. We don't know for sure. But I think we do have a few good options. And I think that as we come up to this next meeting, especially hear what they say and how they react and by how much they raise or don't, I think we'll get a pretty clear indication, especially where we are here in the timeline. We've got at least, a good 2 solid weeks of markets left before we get to that meeting, 2.5 weeks. So God knows what might happen by the time we get there. Plenty more things could break. And so I really do feel like this next one's going to be very, very telling. And so I'm very much looking forward to it for that reason. More on a very long-term basis here. It is interesting that people like Luke Groman, who have been calling for this upcoming meeting to be the last where the pivot happens, are no longer thinking that's what's going to happen. People like him now suspect that the Fed will not pivot because they now think that their base case is essentially that the Fed has weaponized the dollar and they're in this to really collapse everything, especially as it relates to Russia and China. And that's a rabbit hole you can really go down because we are obviously in world war already. It's just not all kinetic. It's mostly economic, especially between Russia and China. And it's being escalated. I mean, I don't know if you guys saw what happened the last couple of days with Biden and China, but he has completely cut them off from their chip production here, especially the advanced stuff. He cut them off from ASML. This is a lithography company, which they just make all of the machines that make all the chips, right? And so they don't have access to that anymore. All of the Americans have been forced to decide whether or not they want to keep their job or keep their status as American citizens. And these companies are pretty much overnight defunct. And the largest companies like Samsung were only given a 1 year reprieve, okay, to kind of get things in order while this transition happens. So this is global economic warfare. And remember, look, I want to remind you guys of something that I thought of. Remember when Trump kind of tried to do something like this? And China responded by saying, well, if you do that, we're going to cut out all of your precursors, all of the things we use in medicine and stuff. And we backed off and didn't go through with it. And what Biden just did is exceptionally more hardcore than what Trump tried to do and threatened to do. All right. And they just outright did it. So it's very interesting, especially the timing with everything breaking down the way it is. With this energy crisis, things are escalating in Russia. And then we pull this move on China. We're poking all the bears at the same time. And so you really have to wonder, what's the game plan? What are they thinking in their mind when they're making these kinds of decisions? I mean, I just don't think that they're that stupid. I'm tired of calling politicians stupid. So it really begs the question of what the angle is and what the long-term plan is. Do they really want war because they feel like war is the ace up the sleeve that nobody can beat America? I don't know, but things are escalating one way or another, and it stands to reason that it's going to continue to do so. And so it's just one more reason I think it's so good to own physical gold and silver too, because you just never know what a day may bring in this world anymore, and so it just gives you that extra security. And if things continue to escalate also, I think the fear aspect and the uncertainty aspect of the trade are going to be a large accelerant for the metals too. That's why I continue to accumulate here, because even though it does look like, we might have a major down week next week in these markets. We might open up on a Black Monday. You never know. But I've still been accumulating because, gold and silver have the unique property to go the other way. It really just depends on the nature of the crash and the reason for it. But they stand to, fall the least and rise first, and go the furthest. So I'm happy to accumulate in this timeline right now, even though I understand we have a little bit of risk to the downside. But things, what are they doing? It's, I don't know, guys. It's like every single week there's another headline, and it's just another big deal. It's another big deal. It's another escalation. We blowing up pipelines, blowing up Nord Stream, blowing up bridges, right? I don't know, man. Every week it's something. It's something, and it really feels like I'm at this point. I named this space. Is this a black swan or a clear harbinger? Right? Because what's the catalyst that's going to happen next to give us the answers we're looking for? I mean, is it so obvious with everything that's going on and all these headlines that we can see right in front of us? Is it, really the slow motion car crash that we can see playing out so clearly? Or is there still yet to come some black swan that nobody's even thinking about that changes everything? I don't know, but it's got me thinking. I can't help but feel like maybe we do have kind of a black swan element on the way, something quote unquote unpredictable around the corner. If anybody has any thoughts on that, feel free. If anybody else wants to come up and chime in, feel free to do so. You're welcome to ask questions, bring up, whatever you want. It's all fair, all well and good.
Another market that bears watching, and it's because 3 weeks ago, crude oil I'm talking about, it was on the lows, $76 or so. Then we started hearing possibilities of OPEC, Saudi Arabia, and other OPEC companies reducing production. And the oil went from $76 to just under $94 in 2 weeks. Well, this last week, Monday was the high, and Friday's the low. We're just like 85.60 was the close, 85.61. So we're down $8 this week in crude oil, and it just doesn't make a lot of sense that silver's down hard, gold's down hard, and crude oil's down hard when the fundamentals kind of elude to me. It makes sense to me that the fundamentals are more friendly than what the price action has been for all three of those markets in the last 5 days.
Yeah, Liberty, I have no idea about their intentions. The only thing I think about maybe China is I try to put myself in their shoes. I'm no geopolitical expert. I kind of think if I were them, I would start dumping treasuries. That would be the weapon that I would use to fight back, right? I wouldn't use any military things. I wouldn't go and try to sanction anybody. I would just dump treasuries. Yeah, because that's kind of just like the weakness of the U.S. theoretically, right? Like even if you want to, even if your goal is exactly what you just said, there's a line on how far the 10-year can go before it becomes problematic for the country whose paper that is. And Jim, I agree with you on that too. But I think this, I don't know, I think it's just like a baby out with the bathwater sometimes too, right? Margin calls, got to dump something. I don't know. I think it's just everybody flying into the USD at once.
Hey, do any of you guys know a good way to play just the rising food prices, which I don't think we've seen the worst of yet? I don't think that one's come home to roost, and obviously we're all going to end up paying for it. But I'm wondering if there's a way to hedge a portfolio with that. I understand there's futures contracts, but wondering on the ETF or stock side.
Probably fertilizer stocks too.
Hutch, there are ETFs. There's one that I don't know the symbol, but there's a corn ETF that I guess would be a securities play on the corn on the Chicago Mercantile, on the Chicago Board of Trade contract that we trade. But you might look into that. You could probably do a Google search that says, what are the food ETFs? And you might find up something like that. I'm sorry, I don't know the symbol.
I think we lost you, bud. Okay. Let's see.
So Liberty, how would you play it? Fertilizer stocks, or what do you think? If you wanted to, hedge yourself for food prices.
Well, I mean, technically, I think you could use the futures market, but I don't get that crazy with it. I just go buy. I went and bought a second freezer. I'm just buying meat now, and you get that baby stocked up real good, and it technically lasts indefinitely. But you don't have to get that crazy. You can simply rotate it around, and if I end up not needing it, so what? Now I have a stock, and I can go a few months without having to buy any, and I'll have a few months of free income that don't have to go to the grocery store. But it seems like a very sensible, reasonable thing to do for me personally. So I have done that, and it makes me feel very confident and at peace. And so I don't have to worry about anything. And so that's one way that I do it is I buy future demand today ahead of those higher prices. And that will help to an extent. I mean, it's not really the answer you're looking for, but that's one realistic way that you can kind of hedge with your family, if things get too crazy there for a while, and especially if there's a shortage.
I'd like to make everybody in the room aware also. There's something called a drought index that comes out every Thursday, and it's as of every Tuesday. The data is up, adjusted, or compiled on each Tuesday, and they publish it Thursday. The United States, the central region of the United States, from Minnesota all the way down to Texas, and then if you go from Kansas all the way, it's starting to move east now. We're terribly dry, folks. We're terribly dry, and crops need moisture. And some yields will be affected this year, but if we don't start getting some rain, one other incidental adjacent to that too is the Mississippi River was compromised with very low levels, and I heard on Thursday that the Ohio River is being compromised with very low levels. So the United States, the central part of the United States, the Corn Belt, the breadbasket, if you will, it needs rain.
That's an
Yeah,
excellent point. Yeah, go ahead.
So on that one, it's so close to harvest that even if we do get a ton of rain, like I live in Iowa, for example, I grew up farming. A lot of my friends farm. Their yields are so-so. I mean, they're not terrible, but they're definitely below average, which is pretty bearish for food prices, or bullish food prices, bearish humanity, I guess. It's kind of too late, actually, even if we get rain, unfortunately, to really change it. It's kind of baked in the cake, as Liberty would say.
Austin, you're 100% correct. I'm talking about for next year.
Ah, gotcha.
Yeah, next year is the challenge. This is kind of the point that I've been trying to hammer home for a while now. Jim is actually 100% correct on this. And the drought, it's not just droughts too. Some areas of the world are getting floods or having their crops get washed away. But between the drought and the flood or the lack of fertilizer, and this varies by nation and geography, but there's a food crisis that's brewing. I mean, next year you're already looking at an 80% decline in tomato product for domestic U.S. tomato production, which will result in higher prices in all tomato related products. You have 40% down in corn. I mean, even Spanish olive crops are down 35%. And you got to remember that you have byproducts from all of these things too, whether it's olive oil, whether it's even cattle have byproducts, right? You get leather, you get byproducts from all food. Okay. You get starches and alcohols and all kinds of things. So this is building up. And again, it's not just getting the crop itself to grow, it's also shipping it. So droughts affect rivers. Okay. And when you can't get the barge to move down the river, you can't move the product. You just saw this a few days ago where we're going to potentially lose a lot of pea crop because they can't get it on the barge to ship it. So they're having to tarp over it and try to save it. It's laying there on the ground. But it also affects energy. This affects dams. This affects reservoirs for hydropower. It could potentially affect nuclear if a nuclear facility relies on the water from the river, right? So the drought is a really big deal. People really don't appreciate how big of a deal it is. And it's not just an annual thing here. This is not just a one-off thing. Most of these areas that are being impacted by this drought is a culmination of a decade or more of drought, especially in China. China's been dealing with drought for the last 20 years. California has been dealing with drought for at least the past decade. I mean, Europe's just gone through the worst drought in the last 600 years, the worst drought in California since the year 800, right? So this is really big stuff, and it's something that's affecting everyone in more ways than they really appreciate. And the thing about it is, like Jim said, most of the damage is not going to happen until next year. Okay, and just think about how a lot of you have heard me say this before, but you're going to hear it again. Think about how it affects cattle. So cattle need rain too, right? They need to fill up their natural water sources. The grass needs rain to grow, and they graze on this grass to be fed. Of course, cattle ranchers have to supplement this lack of grass and lack of natural water with livestock feed or hay, right? And they have to buy water to keep these cows up. And here in Texas, I know people. And look, I was at Boy Scouts the other day with my sons, all right? And I was talking to a gentleman there. His son's in with my son, and he was talking about his friend is a rancher, right? And they already lost 8 cattle this year to dehydration, okay, and drought. A lot of these ranchers are giving away cattle early, right? Because they're too expensive to keep up with. This means that they're not being bred. This is why you saw the reduction in beef prices that you did, because they put more supply out there by getting rid of these cattle early, which just means you're going to have a bigger deficit next year. And so, yeah, it's adding up. It's all coming. It's like, look, this inflation's not going away. It's only going to get worse. And this is just one facet of it. This is just one element of it. This is just food. Okay, this is just food. And, it's not like we're going to be without. I think, especially here in America, we're going to have plenty of food. I think the grocery stores are going to have food. It's just going to be expensive. It's going to be really expensive. I think the real pain and suffering is going to be in some of these other countries, some of these less developed countries. The sanctions on Russia alone are probably going to end up killing a couple 100 million people. Right. And they've already said that as much. They've already admitted that much. Right. The fallout of the lack of food, especially the wheat and the fertilizer that comes from that territory. That's the kind of fallout you're going to have from this war in Ukraine. Okay. And the sanctions in Russia. So it's a serious deal. All right. It really is a serious deal. And you just need to be informed about it so that you can situate yourself for it. And, that's why it gives me some comfort to just go to the ding and dink store or whatever you call it, right, and buy some brand new refrigerator with a dent in the back, right? There's some extra fridge you can have, and just stock that baby up with some meat and let it freeze, and you can just add it up over time, and then it's there. And if you need it, you have it, and if you don't, okay, then you just don't have to go to the store next week. It's not a big deal. But those are little things that you can do in anticipation of stuff like that. Go hunting, go get you a nice deer, right? Slap that baby in the freezer. Hey, man, there's all kinds of ways that you can kind of game the system on that stuff, right? So go ahead, Jim.
Alex, I just direct messaged you that drought index link. If you'd like to put it up for everybody, I also put it on my Twitter handle just now too. So if somebody wanted to, after we're done, you can go to my Twitter feed and see that index. Otherwise, maybe Alex can, if he knows how to put it up. I don't know how to put it up in the spaces here, but it's worth seeing, everybody.
The canned chicken at Costco is actually pretty good, and it holds a long time. And I bought a bunch of it, and I put it in the. Thank you. I put it in the. I put it in the garage, and my wife and kids make fun of me. And when there's no food, I eat it. And people have come over and gone out there for a beverage, and they'll make fun of me. But and hopefully it's just a running joke, and it never comes to fruition. Yeah.
Hey, you're breaking up. If you can hear me, buddy, you're really choppy.
Sorry about that.
No, it's okay. We caught the important part of it, and at first they mock you. You know the quote. Look, let them. I'm not ashamed. Look, I think of it as a clarion call. I don't. I take no shame in taking this position at all. I take pride in it. It's like I feel like I'm awake and aware and conscious of the situation. Like I feel like I'm the one being rational. It's like I say, even if you don't need it, it's like most of these investments, it's like they're not going to go bad on me. There are plenty of things that you can buy that last indefinitely. It's like it's not even a big deal. Just you'll have it forever. And if anything, inflation persists, I'll make money on it. You know how much money I've made on ammunition, just letting it sit, just let it sit there and do nothing. It's twice as valuable as what I paid for it. So, I don't understand why you wouldn't do it. If anything, I've gained. I haven't lost anything, right? And so there's all that kind of stuff. I just, everybody's different. You do what makes you feel good for you and your family and your future, but certainly doing nothing doesn't make any sense whatsoever. Just to go back to COVID, you could see that coming as early as Thanksgiving in 2019. All right. And you could see the videos coming out of China welding people in their homes and locking them in their homes. So whatever the hell it was, you knew it was coming. Okay. And you knew that as it moved west, it was going to change the world. And even once it made it to Italy, we already had enough data to know that it was really only, even at that time, only dangerous for really the elderly, right? Or people with pre-existing conditions kind of stuff, comorbidities. But, I prepared for that, and I ended up not needing most of the stuff that I got, right? But I also didn't have to deal with any of the inconveniences of people. Right. I didn't have to go fight for toilet paper and crap. I already had that stuff. Right. It's like it didn't cost me anything. Right. Because I would have needed those things anyway. I actually could have made money because I had the N95 masks and stuff that nobody could find. Right. I had those things. I bought those in December or something. I ended up not even using them because for me, once it got to us, I recognized it as a total nothing burger. I didn't even wear a mask. Right. But I still prepared for it, right? And it turns out it did change the world, right? It did crash markets. And so it was still something worth preparing for. And I think that what we're talking about right now, between the food crisis, between the macroeconomics, between the wars with Russia and China, this collapsing sovereign debt crisis, this stuff is even more obvious than that virus was in November 2019. This is staring you right in the face. And the idea that you're going to do nothing and not prepare makes no sense to me. I would just encourage you, maybe if it doesn't make sense to you, to hang around and listen, and maybe we can change your mind. But I can assure you that this is coming and nothing can stop it. And there are some very sensible ways that you can protect yourself. And it doesn't always have to be with some Mad Max scenario. It could be as simple as the way you invest and hedge your money to protect your wealth and possibly grow it through a crisis. Because you also have to know and appreciate, guys, that the most opportunistic times to grow your wealth are in times of crisis, right? When there's blood in the streets, as they say. And so you can, at minimum, store up some savings or store up some opportunity, right? Some cash to take advantage when this all inevitably comes. So don't do nothing. Don't just go to work every day and just be like, well, I'll just live my life and whatever happens. Now you have to take initiative on this thing. You have to be ready, and it starts with the mind. Edith, welcome on up. What you got for us?
I have a quick question. A couple of things. One is, do you think the American diet would need to change as well? Because if we're in a drought, which we are, half of our water goes to feed for animals, right? So do you think that the plant-based diet is helping change that, or do you think that's just like no point?
I don't think. I don't think eating more broccoli is a bad idea, right? But I don't think that we're going to start eating crickets and worms and meal and stuff like that. That's out of the question. If the drought we in the United States have access to the largest freshwater reserves in the world. We have a monopoly on the freshwater. We share it with Canada and the technology to purify it, right? I don't know if you've ever been out of the country, Edith, but you can go to a lot of countries, and everywhere you go, you don't drink the water, you drink the Dasani, right? Everybody has bottled water everywhere. That's a luxury we don't have to worry about here in the United States. We have clean water everywhere. So when it comes to that kind of stuff, I'm not really worried about it. I think we're all set here. I don't think there's any reason to get rid of our livestock and our protein sources. I just don't see it yet. It's affecting vegetation. It is getting expensive, but remember, a lot of these costs are coming down to other issues not related to drought. I mean, it's not just the drought that's causing the problem. It's sanctions on Russia and the lack of fertilizer, among many other things that are raising input costs, right? And so this is multifaceted. It's not just the rain, but the rain has a lot to do with it. You're right. But I would say, in my opinion, I don't intend to adjust too much. In fact, that's one of the reasons that I'm storing as much meat as possible.
All right, thank you.
Yeah, sure thing. Edith, are you an investor in precious metals at all whatsoever?
I am not big on it, but I do invest in it. Have been for a few years.
Well, I would be open to hearing your thoughts on maybe what we should do, right? Maybe it sounds like you think maybe we should pull some of this stuff back, so I'd be open to listening to what you have to say.
I'd be more interested in what Hedge has to say. I'm still learning from him.
No
I guess
problem.
Hutch is bringing people in.
So, yeah, guys, what was our rant on there? Anybody got anything to pick up on the prior conversation there? I've completely forgotten what the hell I was saying.
I guess back to food. It's it's just one of those things you have to be responsible about, and it's I've kind of got a big enough amount, and I'm to the point where, not that I'm going nuts or anything, but I prepared for I have to think about other people in the neighborhood almost. Like, hey, these other people are not going to have this or that. So what's another little pasta or another little pasta sauce that lasts for 2 years or so. So I kind of have a good amount of food in my place because you're going to be stuck around neighbors. So you want to be in that situation where you can help them out. So it's part of the way I'm thinking of it right now.
You're thinking of it the right way, and hell, even if you look, it's like just like we talked about, your 2-year pasta sauce is going to be 80% more expensive this year. They've already told you that. It's a Reuters article, right? The producers of tomato paste have already told you that next year it's going to be 80% more expensive than it is this year. So, if it lasts for 2 years and it's going up 80% next year, and look, this is the psychological aspect of inflation, by the way. This is what the Fed wants to break, but they're not going to be able to do it, right? And Powell told you as much, because when he came out there and talked about the pain, remember that when he came out with his pain speech, it was like a 6 or 7 minute speech, and he spent half of it telling you that he was trying to break the psychological aspect of inflation, right? He wanted to change people's behavior, because inflation begets more inflation when you have people like me who are going and buying tomorrow's demand and bringing it into today. Okay, so it takes more supply off of today's shelves. Okay, and this can make inflation worse, right? Tentatively. So, you know. But the thing about it is that if you're wise enough to do that, you can beat everybody else, right? I mean, if it's going to stay on your shelf and last for 2 years, and you know the price is going to be double next year, then why not buy some extra today, right? Especially if it's something you really like. You know, there are plenty of things that I really like, and you know, during COVID and the supply chains, I didn't have them for a long time. That really sucked not having some of my favorite things, right? And so you can think about it that way. There's nothing wrong with identifying the situation rationally, like an adult, and recognizes where we are and preparing for it. I mean, this is just common sense to me, and it just blows me away that some people, you know, defer to it as you know, fear porn or whatever. And it's just common sense to me. It's just
Yeah, the only other advice I'd have is if you don't have any friends that are farmers, go and befriend a farmer. Like some of my friends that are farmers, I bought like a part of a cow for next year's price will be more, but like 225 a pound. Like most of the money that it goes into just like what you see on the store shelf doesn't actually go to the farmer. It goes to just the meat packing plants and just other people along the supply chain too. So you get in contact with a farmer and like you eat beef or pork or anything like that, you can get a heck of a deal compared to what you see on the store. Maybe some places in Texas have the very strong droughts. Maybe that won't be on the table this year, but in the future, probably in most places in the country, you can get a deal. Otherwise, I would strongly recommend starting to do a lot of research into the large fertilizer players in the US and Canada. I remember just like fertilizer stocks went nuts when this whole Russia thing happened. Just like the reason is to basically make fertilizer, to oversimplify it. You need access to cheap and consistent natural gas. It's a little more complicated, but you can think about it like that. These things are starting to go baby out with the bathwater now. People are dumping everything, but the fundamental case for fertilizer in the US has only gotten stronger. Like there are very few places in the world that can still make this stuff cost competitively. Because a lot of the suppliers in Europe are getting shut down, and I don't know when they're going to come back online and just like full. So, and as far as hedging it, besides buying your own food, I would look at U.S. and Canadian fertilizer.
I do have one fertilizer stock that I'm familiar with. It's called Mosaic, and I believe their symbol is MOS. If anybody is interested in that, Mosaic Corp.
I would say Nutrien, Corteva, CF Industries. At least those are the ones that I like. There's some other ones.
Yep, all good. I track some on my channel, and I do technical analysis on them. Corteva, Intrepid, several others. Incidentally, not only do we have this shortage too, but we keep having train wrecks and stuff that were full of potash. It just kind of cracks you up. Let's see, we've got J.R. Henney and Lad on. Let's start with J.R. What's up, buddy? Come on up.
Actually, can we have Lad on go first?
We got Lad on tour. What's up, buddy?
Oh, yeah. Basically, I just wanted to say, as investing goes, you know, I've invested my money heavily in defense contracts, and it's worked out pretty well for me. Once I heard Ukraine was going down, I was like, fuck it, you know what I mean? I'm going to make money off this. And guess what? Every, like, $1 billion package we send over there, I make $1. So y'all better hop on this train. Making money off war, that's what it's about. It's the American dream. That's the American. When you really think about it, we're a war tribe. When it
You're a
comes down to it.
goddamn
Hey,
great
shut up,
American.
J.R. Henney. Shut the fuck up.
I agree. You're a great American.
This guy's
You are
interrupting
great.
me. But basically, what I was saying, right? We're a war tribe. We've been in war our entire history. You know what I mean? Like,
Shut up, you cunt. Shut up, you cunt.
All right, we're not going to do that.
Can I continue?
Yes, sir. Go ahead.
Thank you. Basically, we've been at war the entire time of our history, basically, right? So it's kind of a foolproof idea. You know, we're on top of the world right now. We're the global hegemon. And if all of the best arms are being produced in America, it's a foolproof idea to invest in American arms manufacturing. And that's what Raytheon and Lockheed Martin, all these companies, that's what they do. And guess what? Ukraine's winning with all of our shit that we're paying them to buy off of us. So
Yeah, I think one theme from that maybe he's getting out of the war angle is you have to invest in the world you have, not the world you want. It's fair to put your morals in any investment and stay out of it, but I think the theme I would say is I never thought I'd invest in a coal company, and like, hey, I think personally global warming is real, and we do need to go towards a green energy future, hopefully driven by natural gas as a bridge to nuclear. Yeah, like I've invested in some coal companies and oil companies because it's really, really important to the world, and it's a good opportunity. You have to invest and operate in the world you have with the cards that you're dealt and not the ones you want.
That's true. And I'll just say one thing real quick before I hop off because I got some other things to attend to. But I don't give one single damn if money I make, a boat I buy off the money I make comes from a dead Russian. You know what I mean? Fuck those guys. They invaded another country and they can all die where they stay right now in the east of Ukraine.
Well, all right. Thanks for contributing. It looks like Raytheon stock's down quite a bit. It's down 21% since April. Pretty much at the same place it was at the March 2020 sell-off. Actually, it's a little bit higher than that, but not performing too hot. I think the better plays are probably going to be in your commodities, especially energy. Nothing has more leverage to inflation than energy.
I love war, and I love war, and whenever war happens, war is great, and war is great for money.
You're not wrong. I mean, that is true. I just don't know if there are any. Well, I mean, think about it. If you're buying gold and you're buying fertilizer stocks, I mean, you're essentially looking to profit off of the situation.
You're talking about buying fertilizer. That's kind of suspect. I should call the FBI on you. How much is 600 pounds of fertilizer? Do you know? If you do know, I will call them.
All right, we don't have time for that crap. I don't really care what's going on in the world. There's always a way to play whatever's going on. I'm not looking to, I don't think anybody is, profit on war. But you can recognize the situation for what it is and understand what comes next. And certainly there are two very obvious things. One of them is more inflation, and the second is uncertainty. And both of these are an extraordinary boon for precious metals. And inflation has the most impact on energy. You really saw this coming out of COVID with all that printed money. Sure, the gold price went up 40%. Sure, a lot of these gold and silver stocks went up 400%. But they took a big break, and the oil stocks still look pretty good, especially those big names like EOG. I mean, good grief. I had that early on and let it go. And what a mistake. What a mistake. And what a great dividend. So, just recognize the situation for what it is. We've got an energy crisis. We're short on oil. Even uranium's going to have a big play in what's to come. So there are plenty of ways. Look, we'll do whatever works for you. I mean, there are plenty of commodities that stand to gain from this entire situation. And it's like some of the best minds in the business always say, invest in what you know. Well, if you don't know too much, at least find what you're most interested in. All right. And then go from there. Right. Just start getting your feet wet somewhere. But don't arbitrarily throw darts at things you don't understand at all whatsoever. That's a good way to lose a lot of money, especially companies that you don't really know or understand either. But, this is part of the reason why we come here together in spaces like this is because, some of us, look, iron sharpens iron, and we're hoping to all help each other out. We all have something to contribute here, and we all have opinions, and we can, bounce them off of each other and grow and hopefully come to better conclusions with what we do with not only our money next, but, our personal directions as people too. Hutch, what's up?
Hopefully, I get a better connection now. So I'm just doing some research here, and the ADM keeps popping up. Archer Daniels Midland, not financial advice, but something I'm going to be researching more, as well as GIS, General Mills, because they have pricing power. I haven't really looked at these lately. Don't know how over or undervalued they are, but just some food for thought. And I was hoping you could share. You mentioned some fertilizer names, you and Alex. I was just hoping you could share some tickers so I can just capture them. I'm big boy. I'm responsible for my own investment choices, but just looking for some good names that you guys like that I can research on my own.
Yeah, for sure, man. So there's Mosaic, all right, MOS. There's Nutrien, which is NTR. One I like is Intrepid Potash, which is IPI. There's Corteva, which is CTVA. And those would be the ones that I pay attention to the most. I'm sure Austin or Jim might have more.
No,
Hey,
I would
does any
agree with
con-
those names. The only maybe speculation I put on this, how I kind of think about just like that food situation. I could be completely wrong on this. I would try to play it like earlier in the supply chain, like fertilizer, rather than something that interfaces with the end consumer, like a General Mills, with the rationale that if like inflation is a long-standing political problem, General Mills, just like the gas stations, are under fire for raising the cost of gas from Biden right now, right? Like if food costs go up, General Mills is going to just take it left and right. But these fertilizer companies, they can make money hand over fist and other people in the supply chain, and they're just going to get less hate and bad PR, which can matter to valuations.
That's an awesome point. Thanks, Austin. Yeah, when I was researching best food stocks, NTR and CTVA did come up again. I'm not allowed to give financial advice. I'm no longer a financial advisor, but just a little congruency what I'm hearing between just what I researched now and what you guys just said.
For what it's worth, I opened up the chart on General Mills, and the technicals look pretty overextended. It would not surprise me at all to see a pretty steep sell-off, at least 10 to 20% here, probably in the near future. Just FYI. So if you want to buy it, at least wait. It's going to come down to these moving averages. I can guarantee it. So yeah, and you know what? Just another thing about food, since we've been talking about food, is did you guys see the Alaskan crab situation? 90% of them gone, disappeared, and they don't know where they went, right? They're suspecting something between disease or migration, but the crab season has been canceled for the first time ever. Over 1 billion crabs missing. And so it's just one more thing. You know, this is what I'm talking about. This is the basis for what I'm talking about. It's that every single week there's another link in this chain, and it just keeps growing longer and longer and longer. And this thing's hooked up to an anchor, right? It's like this is bad. There's never any good news anymore. You know, it's like the problems we're aware of, and that we can validate intellectually as being worth our time to pay attention to. They continue to get worse, right? And it's kind of mind blowing. Luke, welcome up, buddy. What you got?
Hey, I was been thinking lately about, if this Petro-Dollar disappears, if this BRICS nations have a new reserve currency, and the whole economic financial landscape starts to change in that aspect, I was just wondering what some of you guys who have probably a little bit more thought on that, what will happen to the whole investing in markets and the investment landscape? I mean, is there a point that we see that it's like stock market exchanges may just overall dissipate? I mean, I understand that's unknown and there's lots of variables that will lead up to that, be it, a momentary pause in markets and exchanges and trades and stuff, or just maybe just what you guys see that landscape might look like when we have if a great new change comes in.
Luke, could I take a stab at that one for you, please?
Yeah, absolutely.
Okay, Luke, what you're saying is, or what you're postulating is the defeat of the US dollar. You say that it loses its petrodollar status. If that were to happen, let's say it happened in the next 6 months or so, I think that would be very, very positive for gold.
Right, and that makes me glad to. I definitely have some physical, and in my 401k, I'm kind of invested in the miners, but I'm just wondering, I need to get some stuff in order for my family in preparation for possible hyperinflation and other aspects. So what happens? When does that? That was another question I had, and think something I've been wondering is if most equity markets start to capitulate, do the mining equities, will they continue to rise with spot gold price, or will those be somewhat separated from that valuation?
It's a good question. It's a really good question. I understand your concern. The bigger question, I think, is concerning the markets. I don't think the markets will dissolve or kind of disappear. All right. I don't think that we have to worry about that. So all things being equal, we keep going about business just maybe in a different kind of macro environment. What might we expect? Well, as it relates to the miners, a lot of it depends on oil because oil is the energy we need to mine in the first place, right? And the more expensive oil becomes, the more expensive all of these commodities will be. And then, so from there, what will the demand look like if the price keeps going up? Well, that kind of depends on how much money they print to maintain all of that demand, right? And, how does that money get spent? It's kind of complicated, but my guess is that, yes, the prices of gold and silver will skyrocket. Gold as a monetary hedge against inflation, silver as the little brother to gold, but also as a necessary industrial component to what will likely be part of their agenda when they print all of this money, which is going to be a lot of green energy, a lot of solar panels, a lot of electric vehicles, right? No doubt more bombs. I mean, there's a lot of silver in these big bombs that they build, right? And so there's already a growing shortage and in silver, and it seems to be getting worse. So for all the talk about a silver squeeze, that might actually come sometime here over the next couple of years. Who knows? Hell, it might happen next week. I don't know. But in my opinion, Luke, I don't think we have to be necessarily concerned about having our money in a brokerage account and losing it in our miners or anything like that, right? I think that if we ever got closer to that day, they'd probably already have like a central bank digital currency by then, and we'd probably start seeing the signposts before then. But I don't think we have those signposts yet. I think I think we're still in an area, in the part of the timeline where we can simply identify good trades and get into them and, make our money. I don't think we have to worry about those things just yet. And if the things you're concerned about start to pan out, I think we'll start to see a lot more signposts because I know what you're concerned about. And I appreciate that. I think about that stuff too, but I don't think we have to worry about that just yet. I think we're still okay. I think the biggest concern might be some of these, because these gold miners are all over the world. I mean, they're in Africa, they're in Australia, they're in Canada, they're in South America, Central America. I mean, they're in Utah. So if some of these nations decide to do something funky, if the world really kind of goes sideways and people become more nationalistic, it stands to reason they could kind of nationalize some of these mines in some of these nations. And I actually, in a situation like that, kind of favor countries like Africa a little bit more because these people don't have the luxury to cry. They got to go to work, man. And it's like you kind of saw that when the COVID-19 lockdowns, where it was really all the Western countries locking down really hard and telling people they couldn't go to work. But some of these emerging markets didn't do that, right? They kind of went on about their business. Certainly some did, but a lot of them didn't, right? They just didn't have the luxury to shut everything down and print a bunch of money, right? They had to go to work. So, some nations in particular said, there's no way we're not doing that, right? So there's a lot to consider, man. But I think for now, I think it's okay. I think, obviously you can't beat physical gold and silver. But I think that we're still safe to invest in the miners for at least the next couple of years. That's the way I see it. If anybody else has another take, go ahead.
I agree with you. I'd like to add one thing on there. I do think it might matter what miners you own too. And so the way I think about it, when you're talking about oil earlier, Liberty, So like people like act like, wow, oil's way down at like $84, crude, whatever it is. That's a good price relative to their net backs. A lot of these companies have net backs, just the cost all in cost of 35, $40. I mean, 1650 isn't a bad price for a lot of these gold companies. Silver is a different story, but Agnico Eagle has a all-in sustaining cost of under $1,100. There's some taxes and stuff on top of that, sure, but like these gold companies are making money. I do think it matters which ones you choose. Somebody like Newmont, for example, they choose to never hedge their oil prices, which is kind of why they've sold off more than the market right now. Something like that's kind of a risk. Some of these small juniors that have sometimes higher all-in sustaining costs, they may be at risk as well. I think there's a heck of a case for royalty and streaming companies like Franco-Nevada, Wheaton Precious, Sandstorm, some others in that regard, is because you're still getting a lot of upside exposure on the gold price, but there's almost no risk of capital impairment, right? Because like Franco-Nevada has something like, I don't know, they do 20 billion in revenue, and I don't know, they have 45 employees. It's nuts, right? Like they have operating margins of over 80%. So I think that's a good middle ground for me, because I could see that if this paper game goes on longer than we think, like if this paper charade goes on for another year, you're going to see a lot of gold and silver miners go bust. But there's going to be a lot of them that are still going to be making money. And those royalty and streaming companies, you can't imagine a better environment than that. They're going to print.
Well, I thank you guys for your insight. Couple notes. I'm not greatly concerned. I am a Christian, so I know people have different views on that, but that's where my faith is, and God will allow to happen what he allows to happen. As to like picking particular companies, I don't have enough time to put into research and study into the market with having two little kids and a family. So basically, I get a great view of the macro from people I find on online interviews. Palisades Gold has opened me up to a lot of good people that I follow and listen to, especially Liberty Offensive. That's when I started following him. So I look at the macro, and then I take like an ETF approach. So GDX is what I'm in now. I'm kind of split between GDX and URNM and some SIL, but I don't have enough time to study all that. And I thank you guys for your views on, whether the market dissolves or not. It wasn't a great concern, but it was just something I was wondering. One show I watch on YouTube, I think it's either ITM Trading. It's got Lynette Zhang, and she's kind of a doom and gloomer, but she always talks about, get your stuff lined up, water, food, energy, security, real money. And, I'm with her on that. But she was the one who kind of brought that thought into my mind, because, she states, well, I'm not in any equities. All my assets are in physical things that I can touch and own. And I see her angle. I was just wondering what some other folks thought about what all happens to that in a great reset scenario. So thank you guys.
I guess I'll jump in for a minute and then we'll get to Hutch. But it's kind of it's a weird thing, because a lot of people get into the trade or into metals out of fear. And, I had my kind of fear moment in 2011 or 10 or something. And, I was just going around buying extra groceries and thinking like, oh, I got to get hoarded up and everything. But I mean, there's going to be bad things that are going to happen. But, a lot of the gold doomers or whatever have been saying, all these things for, decades and decades. So, I mean, it's something you have to prepare for, but it's not something you really want to happen. You don't really want to, wake up in a world where, it's things are Mad Max style and everything. So, I mean, you want to prepare for everything, but, don't let it get to you too much where you are just doing things that are, out of fear. Just think rationally, because it gets exhausting. That's kind of why, a long time ago, I kind of just quit gold for a while, because I was just exhausted. I was like, it's just the fear. They have a saying about like bears get headlines and bulls make money, where that headline of, oh, there's going to be food shortages, everyone's going to read that. That's going to be the biggest, headline of the year. But, that might not be the real reality. Hedge, go ahead.
Yeah, I was hoping. I actually sold some puts on GDX that I may get put here in October. And whenever I do that, I usually like to rotate out of something like a GDX. And so I was hoping to get Austin's take on, his knowledge about which ones are hedging for oil and which ones have royalty streams. I was hoping you could share some tickers, Austin, or anybody for miners you like.
Oh, sure. On the stock side, I do invest a lot of my money into the royalty and streaming companies just because I think I'm bullish, but it is a very uncertain environment. And I really don't think in any scenario that like Franco-Nevada is going to lose another 30% from here. It's possible, but I just don't think it's going to happen. So I do just go with a lot of streaming and royalty companies for that reason, because it's just easy. The capital impairment risk is almost zero. The royalty itself is on the mine, not with the company. So if another company comes and picks it up later, you still make money. Otherwise, I really like Agnico Eagle. They do generally do a pretty good job of hedging their fuel costs to the extent possible in this environment. They have a really low average all-in sustaining cost, while they have a pretty good growth profile or future from their acquisition of Kirkland. On the silver side, I love Silvercrest. They are just going to go into full production in about a month or two, actually, and they have an average cost of about 7 from their feasibility study. I mean, round up, let's say with inflation, it ends up being 10. They're going to make a lot of money at $19 silver, right? I think that they are wildly undervalued. First Majestic, I love First Majestic. They probably have like the most upside to the silver price of any company out there, except maybe for the exception of Silvercrest in that regard. And on this space, Liberty and Alex had Lawrence Lepard on here maybe a month ago, and he said that he spoke to the First Majestic folks, and they basically had a situation where what they do is they go and they buy mines that other mining companies more or less managed poorly to have high potential. So they take them over and they have really, really high all-in sustaining costs. And a lot of investors that just don't go deep or really understand what this company does, they'll go and they'll sell it off because they'll just look at their margins, right? Like, oh, their operating margins are terrible. They're going to lose money at $19 silver. Yeah, they have great management. They do this again and again and again. Jarrett Canyon, allegedly at least, is fixed. Their operating costs are coming down. It's just a really, really good company. I know Liberty's a fan of this one as well. I think First Majestic is a great company to go and visit because if silver takes off to 50, First Majestic's going to the heavens.
Hey, which was the one that takes over distress mines?
First Majestic. So AG is the ticker.
Oh, got it. Okay, same one. Okay, cool. Thanks.
I also just nested a tweet from our interview with Don Durrett, and it's about 4 hours long worth of gold and silver stocks and macro, and we talked about it all, right? But I have it all timestamped on YouTube, so you could skip to the parts you want to see. We talk about a lot of companies individually, and there's even a section where I talk about my top holdings in my portfolio, and he kind of ranks them. So that's a really good opportunity to get a lot of due diligence from a pretty good source who knows his stuff. So if you don't have the time to really research into that, you can go watch that video. And again, I have it timestamped, so you can skip right to the parts you want and the companies you're interested in.
That's awesome. Yeah, because I follow him and he puts out like all kinds of lists and it's just overwhelming and you have to kind of assume the ones at the top are the ones he likes. But to be able to get that context, if you timestamp that, I know that's a lot of work. That's awesome. So thank you.
I will tell you too, for whatever it's worth, is that, I have paid over the years for the newsletters of several prominent people, right? And there's a lot of consistency with a lot of these top names. Okay. So it's not like they're just, putting out the names that's in their book or whatever. I mean, you tend to find a few of these names in everybody's thing, right? So Minera Alamos is one. And, pretty much most of the ones that we talked about in that video, they're pretty consistent in everybody's portfolio and everybody's newsletter. So if that means anything. And excuse me, to follow up on something Luke was talking about earlier that we didn't actually, you know what? I can get to that later. John, you've been up for a while. What you got, buddy?
Hey, how's it going, guys? So I haven't heard you guys talk about Uranium Royalty Corp at all. That's my biggest holding right now. I own pretty much everything, but I thought that it looked like a great deal at like 214. Any of you guys in that?
I'm not. I guess my only thought on Uranium Royalty Corp is I haven't looked in a while. Last I looked, like I wasn't clear on just like what they owned that was going to go in production for the next couple of years. I think generally when you're investing in a royalty or streaming company, you're investing in the team that. So if you're investing in a mining company, you're both investing in the team and the project. When you're investing in a royalty company, you're just investing in the people. So I guess it just comes down to your opinion of, I think his name's Amir Amani and his partners in that one. If you're bullish on him, the investment makes sense. If you don't have a lot of faith in him, I wouldn't touch it because it's just, you're really investing in a person and their ability to deploy capital.
All right, thanks, man.
And sometimes it means a lot. I mean, like with First Majestic, Keith Neumeyer. I mean, that guy is a legend, right? I mean, he is always doing the right thing, it seems like, and making contrarian decisions within the space. And, you know, when the silver price is really down or even when it gets up, he takes, unique moves to his peers. And he's a really good guy. So that means a lot, what he's saying. I'm personally not a fan of that guy. I get the wrong vibe off of him. I don't think he's the Keith Neumeyer of uranium, but that's my opinion. But
since you guys,
go ahead, Hutch.
I was just going to shift gears to something that somebody talked about, or I think it was you. You were saying that the central bank stable coin isn't out yet. And yeah, that is definitely something to fear. But there's a couple of CBDCs and drag out there. PayPal, obviously, with their announcement of or whatever their buried terms that if you say something that they don't like, they can fine you $2,500 or just gank $2,500 from your account. And USDC, Circle, the stable coin that is allegedly backed and probably is because they've had investments by BlackRock and Fidelity. A lot of people in the crypto space are basically saying that this is kind of ushering in CBDCs without it being a CBDC. So just something to have on your radar screen.
Yeah, I will say that one glimmer of light on this whole thing is that I was actually on the Fed's Twitter page today, and one of their recent postings was a speech by Waller, and he pretty much made the case against central bank digital currency. So it's not all of the Fed members are on board with this thing. You have a few of them actually speaking out against it, and that it's actually kind of a dumb idea. It was very interesting to read. Next time somebody talks, I'll go pull it up and I'll nest it for you guys. You can check it out if you want, but it's not a foregone conclusion yet, I guess is what I'm trying to say. We might have a little bit more time on this thing than we appreciate because, he didn't just kind of run his mouth. He made some very eloquent arguments. I mean, it was pretty good. I was very surprised, honestly, to have read that. And it was just from, I think, yesterday that he came out with it. So pretty interesting stuff. But nonetheless, it is on the way, I think, inevitably anyway. I mean, it's not just the United States, right? China's already got one. They've had one for a couple of years. They've been testing it all over the place. Of course, they're going to couple it with their overall, surveillance state. I mean, you can't do anything in that country without reporting in or being on camera and being filmed and being surveilled pretty much 100% of the time. I mean, you got people over there who can't leave their house without taking a COVID test, and they have to take another one before they can come back in the house. It's insane what's going on over there. I mean, that is the most bizarre place in the world right now. It's China and what they're doing and getting away with. It's just, I don't know, man. I wish I understood what was really happening in China. I really do, because they can't possibly be afraid of that virus, right? It can't. That doesn't make any sense. So what is it? Is that their excuse to shut down their economy because that's their way of fighting the United States, right? Maybe, shooting themselves in the foot to, cripple our needs, so to speak. I don't know. But whatever's going on over there, doesn't make a whole lot of sense to me. The surveillance thing I get, they're tyrannical, but the economy thing, the economic part, I don't know. But they're definitely stockpiling gold. So is Russia. I think Russia's up to 12,000 tons, and that's a big deal, especially if they can get some of these European nations here in the next couple of months in the dead of winter to, come and buy energy from them directly in their local currency without going through the dollar. Somebody had brought this up earlier. I think it was Luke. Kind of the end of the petrodollar system. I think that this is Russia's play, actually. Everybody keeps talking about Putin. He's going to nuke everybody. It's like, I don't think that's his play. Like, Putin's nuke is monetary, right? It's financial. His best weapon is his leverage of energy and the fact that we all need it and can't do a whole lot without it, right? We're suffering. In fact, that's why you're starting to see markets collapse. That's why you're seeing everything come to a head, is because after all this debt and borrowing from the future, we finally run out of energy to grow out of it, right? So as the Fed's raising interest rates, the GDP is also rolling over, all right? And then energy has a lot to do with that. It has a lot to do with it globally. And so they're not going to be able to grow their way out of these problems anymore. So suffices to say that this energy crisis has a lot of legs left underneath it, especially in terms of time. And we've talked about this a few times too. So a lot of these European nations only have on average 2 months of reserves left. When I say reserves, I'm really speaking of United States treasuries, okay? On average, 2 months of reserves left in terms of time, all right? So you take their total number of treasuries, divide it by how fast they're burning through them in months, you get about an average of 2 months left before they run out. So what does that mean? That means is that when they run out, they will no longer be able to use those treasuries to buy their oil that they need, right, and their energy. And so this means that they're going to have to print money. Well, what will that mean? Well, I don't know if you paid attention lately, but when the Bank of England threatened to, or was going to go through with lowering taxes and printing money as stimulus to help through this energy crisis, the pound completely collapsed, and they almost lost their entire pension system over it. So once they run out of treasuries, they're not going to have any choice but to do that, because they're going to be broke and they're not going to be able to buy energy. Okay, so this is a big deal, and this is all going to happen in the dead of winter. And so it could be that when we get to that moment in time, that Russia says, look, why go buy those dollars and then buy oil? Why don't you just buy oil from us, and we'll settle, we'll use your currency and settle in gold. I mean, this could, and we, us being Russia, we'll give you 60 barrels of oil versus maybe the 40 that you would get in dollars, right, in gold equivalent. What if they did that? What if that happened? I mean, first of all, you would have desperate nations who need the energy. You would have Russia with all the leverage to do it. And if they only got a couple of these countries to go through with it, the free market would go in and arbitrage the difference, and they would break the Western gold market and the dollar peg on oil overnight. It would completely ruin the dollar's hegemony overnight. It would break it. If I were Russia, right, I'd be doing something like that, right? Even if there's a piece that I'm missing in my mind that I don't understand, something along those lines, I think is very possible, right? And it's going to have a whole lot more meaningful impact than dropping bombs on some country, right? All right, in a war that you probably would lose if you escalated it to that level. But on a financial level, especially if you have the backing of a couple of other countries like China, look what Biden just did with China, right? He poked the bear with those guys. He cut them off. He cut them off from all of their semiconductor capability. That's a big deal. You just poked another bear. And so you're giving all of these other nations who are somewhat isolated reason to group up and team up together, right? And so I can see something like this happen. And I do think that the dollar is in the sights, right, of this global economic war. I think a lot of nations, it's in their interest to try to take it out. And there are a lot of sneaky ways to do it. And for now, the dollar's been winning because the Fed's been raising rates while everybody else either has not or has been doing it much more slowly. but that can only go on so long too. Again, that's part of what you saw in the collapse of the pound in England. And so this is kind of coming to a head here. Things are changing. Things are changing quickly. And I think by the end of the year, I don't know, the conversations we're going to have in this space are going to be very, very interesting, for sure. If anybody else wants to come up, chime in, change the subject, ask the question. It could be related to gold and silver. It could be related to investing, macro news, anything at all. Feel free.
Yeah. So another thing, I know, we can see this data that, like with precious metals coming into countries like India, China, Russia, Turkey, I don't ever see any news or any numbers on America and what they're doing. And I know we're supposedly have 8,000 tons in reserves, but that hasn't been audited by a third party. What's up with that and not hearing any reports of America and their precious metals?
That's the $1 million question, for sure. I want to know the same thing. Excuse me. Hold on, guys. I'm having a cough attack. Hold on.
I would be surprised if the U.S. actually doesn't have the full 8,133 tons or whatever it is to say. I would actually say skew it on the upside, because the thing is, nobody knows what happened with that German gold after World War II, right? Who was kind of in power after that? The U.S. I don't know. Like, I'm not saying it's impossible. Anyways, I don't necessarily think that. If anything, I think that if the U.S. has no gold, that makes the gold thesis weaker, because it means that we will go to any lengths to stop gold from being prominent again. I think the much more likely option is that the U.S. has the full 8,000 whatever tons that they say they have or more, because from their perspective, what incentive would they have to sell it? They have a printing press and have for well over a century, where the Fed can create however much money they want. It's like, why would they ever need to sell gold to get dollars when they can print dollars? I guess it's the entire argument that the U.S. has sold off their gold. I've never really understood it, because it seems illogical to me. More broadly, I don't know if the U.S. was importing gold. Like, I think that with all of our top flight intelligence agencies, we could figure out a way to do it without just like tipping off the news reporters. And like, the reason that if you're the US, I think that you'd want to do it on the down low is because gold is like the only actual possible competitor to the US dollar, right? Greenspan even said it. Greenspan has a famous quote where he basically says that gold is the only currency that even the US dollar cannot match. It's like, if the US were going to be importing gold from a government basis, they would go to any lengths to not tell anybody about it. But more broadly, there's a definite trend. There's gold going into India, going into the Shanghai Gold Exchange, and it's flowing off the COMEX, and the silver especially is flowing off the LBMA. Gold is going from west to east right now, and I don't know how much longer that can continue. I think that cooler heads almost have to prevail, and Western leaders will eventually have to put a stop to this somehow, because you can't let this continue on for 2 more years. At this pace, there will be no silver or gold left in the West, outside of government vaults, that is.
Right. So another thought I have was with, what the United States has, or what any country has, is I would almost be hedging if I were a government to, quietly encourage my citizens to own some precious metals without tipping them off in the matter of saying, well, don't trust our fiat currency. But like, that would almost be a savings account. If every American had a little bit of gold and silver, there's way more Americans in population that, well, I haven't done the numbers, but if everyone had an ounce or two of gold, that would, they can do confiscations and stuff, which I'm not fond of and don't want to push or say I support. But instead of having it all in one Fort Knox safe or multiple vaults, I think it would be good to say, well, we've kind of spread out our savings among our citizens. We've spread out our, firepower with, was it the Second Amendment with, all of our citizens have firearms. And I think that's something I kind of look at and go, well, regardless, hopefully there's enough patriots who own some precious metals. There's enough folks who own firearms and things like that for one of those doomsday-ish big shakeup scenarios. So
I actually think the reason is it goes back to the CBDC thing. Even though this isn't tyrannical China surveillance, I think they want everything in the realm of the fiat where it can be traced. And I think they're treading lightly with the CBDC agenda, but they want it because that's the ultimate modicum of control. And if people are holding physical gold and silver, that's a lot tougher to track, and that puts a lot more empowerment to the citizenry.
Well, if I don't know, I'll never be a politician because, I have some angles and things I stand on the majority do not like. But to me, that's kind of just a hedge. It's like, yeah, I understand the untraceability and people can get it across the border and move it places, but that would just be a little bit of insurance, as long as as long as the government has done good, which, arguable. They're not for the people. They're for corporations and Wall Street. Get that. But if they had a track record of doing so and the people of this nation still felt a sense of patriotism, I think that would be a good insurance. But, it is what it is.
I think it would be too. There is that guy from West Virginia. I started following him on Twitter because he's a politician and he was calling for the gold standard. I don't know if anybody else heard about him. I can't think of his name, but I don't think it'll ever happen in a million years. But, I thought that was a great idea.
Is he the one who introduced that new bill to reback the dollar with gold? Is that what you're talking about?
Yeah, the bill to put us back on the gold standard. Looks like a young guy.
Yeah. I haven't looked too much into that one. I just feel like if that hadn't been brought up already, there's probably a reason. And if he said he looked like a young guy, he's probably got a good head on his shoulder. And, understandably, with all good things coming out of bad practices, and there's going to be pain. There's going to be huge changes. And I feel like, if this is a smaller politician who's younger and hasn't been in the political realm that long, he probably just doesn't understand all the I mean, sure, he understands it, but the ramifications of all this lobbying and what the government is working toward and the big secret stuff that, they don't tell a senator or a House member as soon as they, get into politics until you move up and you prove you're working for the cabal instead of working for the people. So we'll just see where that bill goes.
Yeah, right on. Right on. There are some other interesting ideas, beyond the gold standard. Just, Zoltan Pozar, right? You can have a basket of commodities. Of course, they could try to do a debt jubilee. Austin and I were talking about this before, where you kind of just inflate the hell out of the currency, use it to buy a bunch of gold, and then you revalue gold, right? And just kind of cancel out the debt. There's some sneaky things, I suppose, that they could try. But the thing about it is that if you're going to try to do something like that, you kind of have to have everybody on board, because these debts are global and they're all shared, and we're all kind of in this thing together. And I don't know. I think that's the complication that we're fighting through right now. Is you have nations like Russia, which whether you like Putin or not is irrelevant. I think Putin doesn't want to be kind of part of the Western world, and I think that's part of the fight, right? He doesn't bend the knee like the rest of the vassals in the empire, and that's part of the fight. Same thing with China, right? But we all need each other in the end for one reason or another, whether it's resources or manufacturing or et cetera. But I think we're all the world's kind of going through this fight right now, and it'll probably last for a bit longer. Excuse me. If anybody has anything else, feel free to come on up. But go ahead, Austin.
Yeah, let me know a thought on that. I actually think that's pretty fairly feasible. Not necessarily saying it's going to happen, but basically the theory is that governments would be raising interest rates right now, trying to send bond markets just through the roof, which would mean that bondholders are willingly selling their holdings, right? They're selling it because they don't want this debt anymore to somebody for less money, yields go up. So eventually, when it gets bad enough, they can just go ahead and just buy a big portion of it back in a crisis and then revalue their gold holdings. They could effectively use that asset on their books to cancel out the bad debt. And then if all of a sudden, if you could reduce debt to GDP by, say, 50%, something like that, you don't have to buy it all back, just buy a chunk of it back. That could just really extend the runway for governments to keep going for decades and decades further, right? I don't think it's crazy. I don't think we'll see a situation where governments start coming to want to like confiscate your American Eagle coin. I mean, it's possible, but I don't think so. I would say if they have an angle more around gold, that's probably it. Just using it, revaluing it to cancel out bad debt, because in that situation, they didn't screw anybody over. Nobody got screwed over. The bondholders paid the tab, but they did it willingly. They sold their debt to somebody else, right? And they bought it for more than that person had bought it for. So I think that's one situation where they can snake their way out of this, and nobody, literally nobody, has a reason to complain, right? Nobody should be rioting or complaining because the bondholders paid the tab, which has basically been Luke Groman's thesis for years and years now. But they didn't coerce anybody to do anything. You sold your debt to somebody else for less, and we bought your debt for more. What are you complaining about?
My mind just got blown. So are you saying that they're basically like almost like whale crypto traders short the shit out of an asset to buy it back cheaper? That's what's happening to treasuries right now? Because I've looked at those charts, TLT, IEF, IEI, that basically this is like a global just shorting the shit out of bonds. So like you said, they can buy them back cheaper later after they kind of revalue the national debt to GDP. If so, my mind's fucking blown.
That is pretty much exactly the theory. It's not my theory, though, to be clear. It's not an original Austin idea. Other people have basically said different flavors of that same concept, but that's it.
Wow. I did just post the tweet. I found the tweet that I liked of Alex Mooney. It's up in the top of the space. The Gold Standard Restoration Act probably won't happen. They'll probably do the theory that you were just talking about.
Yeah. It's possible. I mean, it's a very sound, logical, and very well spoken, Austin, argument there. Whatever the hell they're going to do, they're definitely something's going to change, right? We're not going to keep what we got. That doesn't make any sense to me. But I think that's what we're in the process of figuring out, right? Yeah.
Does it make sense? Because I was looking at the Treasury stuff. I mean, does it make sense at some point? Like I was following who's the guy? If you understand this, right? And he's been saying that, basically if bonds fail, it's the end of the world. So I'm thinking, at some point, it's almost like a stable coin depegging to a degree. Like at some point, it's probably going to restore its peg or it's going to be the end of the world. Does it make sense to scoop up some TLT or IEF or whatever? Not financial advice, but these are ETFs that track treasuries. What do you guys think?
Yeah. The thing about it, you're probably talking about Michael Gayed, right? He's always talking about few.
Yeah, few understand this. Yeah.
Not that old though.
Yeah. Well, the thing is that as yields rise, things do start to break down in a very meaningful way. And the thing about it also is that the bond market's beginning to be so illiquid that it doesn't take a whole lot to move it. Just when Japan, they dumped $21 billion in treasuries and moved the long end of the curve by 3% on their on their dump alone, and that was just $21 billion. They still have over $1 trillion. And now the situation that they're in that caused them to dump that $21 billion in the first place is worse than it was when they did it. And this is the kind of situation that we're looking forward to, I think, next week, where you have the setup for a lot of people. And look, remember, we kind of talked about this earlier too. Everybody needs to dump their treasuries because they're trying to defend their own currencies against a rising dollar, right? So all these nations are needing to burn more and more and more of their reserves, especially as the dollar goes higher and energy goes higher, it requires even more. And so we're coming into this situation where you have an illiquid bond market and everybody's about to have to dump more than ever. It could really get out of hand really fast. This is why you had Yellen come out yesterday saying that, do we need to come in here and provide some liquidity? Okay, the Fed already sent $9 billion of liquidity to the Swiss National Bank. So we're already getting there. We're getting there where things are going to start rolling over and collapse. And I think it's pretty imminent. You're just a day away. You're going to wake up to the headlines one of these mornings in the near future, I think, when something is broken. Or on your way home. Certainly one of these days in the near term, something's going to break. We're just already there, obviously. I mean, it's already happening in real time. But to answer your question, I mean, because nobody's buying them. Who the hell is there to buy these things? Nobody wants to buy them. Everybody wants to dump them. And, the only reason that they're not higher than they are is because, I think people still buy onto this idea that inflation is transitory. And so they're not worried about it because they're expecting it to come back around, but it's not transitory. Inflation's just going to get worse. We haven't even got to double digits yet, man. That's where we're going, and people keep making up excuses for these higher inflation prints. Like, oh, it's lag data. It's like, dude, food inflation's higher than ever, and it's just now getting started, right? Just now getting started in food, just now getting started in energy. They haven't even stopped with the SPR draws yet. What happens to oil after the elections, after the midterms, when it's no longer politically expedient to pull these reserves, right? You're going to see the prices, everything continue to go up. So no, inflation's going to get worse. And once people start figuring that out, yields are going to collapse. They're going to absolutely collapse because when people finally get it through their heads that inflation is not transitory, this is not a fight that the Fed can fight. It's over. It's game over. And, it might not even make it that far because, like we had just alluded to, you have an illiquid market and Yellen's already talking about coming in and supplying liquidity.
Yeah, on TLT, the way I think about this, and I believe it was Brent Johnson where I got exposed to this idea first. I wouldn't buy TLT unless you think the dollar's peaked. And this is something that's really perplexed me because I've seen so many people on FinTwit that are both bullish on this dollar wrecking ball and have also been bullish on the long bond since it was at like 2.3. Yeah, now it's like pressing 4. So what is a treasury? A treasury is a claim on dollars, and it's the most liquid form and easiest way to get dollars in the world. If there's if there's a dollar shortage in the world, what are people going to do? Other countries and institutions around the world, they're going to keep selling treasuries. So I would guess that when the dollar peaks, treasuries peak, and you can buy TLT. That's my best guess. But I think I would say it's risky to have both views that there's a dollar wrecking ball that's going to continue, and that TLT is going to be a good investment. I don't see it. I'm not saying it's impossible, but I think those forces are almost opposite. The only other thing on treasuries is, I don't know. It's like, yeah, they're way higher than they have been in the last 12 years or whatever. But is it possible we're just finding out what the actual clearing price is of a government promise right now? Because the Fed's been doing QE since 2008. Like the long bond isn't much. It might even be lower than it was pre-GFC. So is it possible we're just seeing what the actual clearing price is of a bond? This not being manipulated downwards by the Fed buying them all.
Yeah.
Just real quick, like I understand your point about the ongoing inflation. I didn't like TLT as much with the 20-year stuff, but at some point, like if these things just keep bleeding, going back to what you said earlier about the U.S. is kind of weaponizing the dollar, and I believe that. It's like, yeah, everybody here is feeling a little bit more pain at the pump and a little more pain at the grocery store, but it's almost like a question of global dominance or global survival. So if you believe that they're not going to secede, they're not going to cede control, at some point, these treasuries, like I said, they're almost like a stable coin. It probably makes sense to get, right? Like maybe not now, but when would you say would be the time to look for that?
Well, if
I don't
go
know.
ahead. Yeah, if you really wanted to buy treasuries, you'd have to wait until you got a meaningful buyer, and that would likely be the Fed. Without the Fed to backstop them, they're going to continue dumping because none of the foreign sovereigns have any reason to buy them, right? Because they don't have any money; they're all broke, so they'd have to print money to do it. And that's why they're burning through the ones that they have right now, right? They're just going to make their problem worse if they go buy them. So that's why they're dumping them. So it doesn't make any sense whatsoever for anyone to buy them, and that's kind of the problem. That's why there's no liquidity, right? That's why the bottom's about to fall out of this thing. That's part of the reason I just don't understand how they continue to hike much further, because it just we're already kind of there, we're already at the edge of the cliff, and that's what makes it so interesting to me. If they continue down this path, it would just be a signal to me that they're doing something beyond the narrative of fighting inflation. They have a greater agenda that they're working towards, because it doesn't make any sense. But no, there's no way you could buy them until the Fed does, right? No way. Which, by the way, if you're interested in crypto, I think that's also the signal to get back into Bitcoin or any other kind of crypto, especially Bitcoin, because there's a historical one-to-one relationship with Bitcoin and the Fed balance sheet. So once it becomes clear, you can kind of think about it as how gold moves. Gold has historical analogs too, right? So once the Fed makes a pivot or a change in their policy, that's going to be a major signal for gold. Well, once the Fed signals that they're about to, or actually starts expanding their balance sheet again, Bitcoin's going to explode higher. Absolutely. So it doesn't even matter what the price is. That you're not really looking for price on Bitcoin. It doesn't matter if it's 20,000. It doesn't matter if it's $2. You don't care about what the price is. You just care about the Fed and whether they're expanding their balance sheet or not. The day that happens, I'm probably going to open up a fairly decent position in Bitcoin.
So out of curiosity, what wallet is like the best one to use now? I'm not really a crypto guy, but I am interested in buying Bitcoin when the balance sheet goes up.
Coinbase is just the easiest, in my
No,
opinion.
no. It's that's an on-ramp wallet. You want a Ledger or a Trezor. It's a hardware wallet, because Coinbase, it's an exchange, and we had a few exchanges just recently just go belly up. It's not safe there. So it's fine to use exchanges for on-ramps. It's not fine to keep it there. So you can use Coinbase, and I agree that that is a great place to go ahead and on-ramp money. It's almost like the same thing as buying silver ETFs or holding physical. You need to have a Ledger or a Trezor. I believe it's Trezor, Trezor, hardware wallet. Have your 24 words and keep it in cold storage there.
All right, my words are silver, First Majestic, Pan American Silver, Agnico Eagle, etc.
All right. Anybody got anything else? We're coming up on 2 hours. Happy to keep going if you guys have anything you'd like to talk about. Otherwise, we'll start wrapping it up. Anything at all? Feel free to raise your hand. Chime on in.
Well, the gold divided by silver ratio this week got to 90. Started at 84 on Sunday night's opening and got to 90 on Friday. So silver got cheaper compared to gold.
Is that just a flight to safety, Jim?
Hi.
I don't see it as a flight to safety. I just think that silver's a smaller market and it got pushed down a larger percentage than gold did for the week.
Yeah, and when you look at the gold-silver ratio, especially when you zoom out on the monthly time frame, I mean, all the moving averages and everything are still moving up. it feels like it'll take a major event or a lot of time before it really starts rolling over. It bounced at right about 82, and historically that is a major level of both support and resistance, and it put in a big wick on it. I mean, it's probably going to stay up there for a good bit longer, I would have to guess, just looking at the chart. So we'll see. We shall see, right? But the good news is that neither gold nor silver have set new lows on these big sell-offs yet. So at least in the short term, that's pretty good. But I have some downside targets I'm looking at. If we were to get some kind of a major flush, a major sell-off, big liquidity event, I think that the line in the sand, the last chance, very well could be about $16 silver and about $15.50 gold. So that's where I'm going to try to catch the knife if that takes place, and we'll see. But I am absolutely going to go for it there because whatever happens to cause that sell-off, it's going to be the kind of event that you want to own these things for in the first place. And by the way, it's going to be a great time if you get this liquidity sell-off to buy probably a few other things too, like perhaps some oil stocks, other commodity stocks, maybe even uranium stocks too. A lot of these things are about kind of trading in the same place in the same way. Gold, silver, and uranium had a lot of confluence in the way they were trading for a long time. And I think, I haven't talked about that in a while, but we could be getting that kind of setup here again because uranium is telling us that a big dump is coming. And when you look at the macro, you look at the broad markets, it stands to reason that they're going to continue to dump too. And so when you look at these things in culmination as a whole, I mean, it kind of makes sense that we're in for a down week next week. But, as people start to get scared and you start to see these fishing lines on the charts, that's when that real opportunity comes. So that's why I'm kind of looking forward to these price levels in advance in anticipation to kind of catch it. But
Yeah, only other thing I'd say, Liberty, is what makes gold and silver such a tricky space is historically, if you look at just like the tech bubble, the GFC, and then COVID, like gold and silver, especially the stocks, they don't just kind of like go up 3%, then another 3%, then 6%, and 3%, and kind of give you a warning on the technicals, like when to get back in for sure. The history of this stuff is like when they start to go, it can feel kind of random and just they're up 40% in 2 trading days, and it's nuts. Typically, they'll come back about another 10% to give you maybe one more decent entry in there, but when these things go, they freaking go, which is why, like, I don't know, for me, for all I know, we're going to have a Black Monday on Monday, and the silver stocks are going to go down 25%. I have no idea. But on the same hand, they could also open up 20% in pre-market. I don't think that's hyperbole at all. Like, look at just like what's going on over in the UK right now. They've allegedly stopped buying bonds, the Bank of England. I don't know, what if these hedge funds blow up on our Sunday night, their Monday morning, and all of a sudden people start pricing in that this central bank jig is up? Is that likely to happen this Monday? No, but I do think that we're going to wake up one day. It's going to feel random to all of us. Something else happened overnight. We're just going to get on Yahoo Finance and see these things are up 20, 25% in pre-market because that's the history in recessions like this. We'll see what happens. And again, could that 25% come after they sell off another 25% from here? Sure. So definitely don't blow your entire load just like one day. I would definitely accumulate, average in, but just keep that in mind. Like, nobody's going to blow a whistle and put out a press release when this thing finally turns. So that's why when the price is good enough and valuations are good enough, I think you just buy it because the best time to buy undervalued assets is when you can.
That last big green candle we had, that 8% one-day candle, that shows the silver squeeze. It's like a mini silver squeeze right there. But I agree with you. Like when it's finally on, it's going to look more like 20 or 25%.
Yeah, and I agree with everything Austin said. I think that key word there is accumulate. You don't want to go all in on one place. Just get in over time. You get some down days, down weeks. Go ahead and take advantage because, my theory here is that as we get so close and it, becomes increasingly obvious just how close we are. That in terms of time, I don't think there's a whole lot of risk in this thing, right? We're kind of coming to the tail end of this development where we're going to begin starting the recognition of something more serious taking place, right? And this traditionally is where gold and silver start to take off. They'll sell off with the broad markets, and then they'll take off, rebound first, and they'll go the furthest. They won't look back. Austin was just talking about how fast they take off. On the bottom of COVID, First Majestic rebounded 60% just the first week. If you go back to 2018, it's the same thing. 2015, I mean, it takes off. It just doesn't look back. And, that's why you kind of want to be exposed to it, I think, in my opinion now. That's why I don't want to be 100% all cash, because you don't know what the sell-off or the event might look like or what it might be. It might be 100%, it could be the kind of thing that where gold and silver doesn't sell off at all, so just accumulate over time. I think it'll be okay because, a little bit of risk on the y-axis, but really none at all on the x-axis. That's kind of how I'm playing it, how I'm looking at it. You guys, please forgive me tonight, by the way. I've been kind of under the weather, not speaking or thinking as well as usual, but keep having a cough and stuff. But, if anybody else has anything, feel free to come on up. Absolutely.
Question on the moves with precious metals on the spot markets. Like we were talking about, silver made like an 8% move, and we're talking about the possibility for it to do a 20% one day. I don't know where I heard it, and I did not look into it yet, but someone was saying something about like there's essentially a cap on gold. I don't know if it's the market makers or what, that they don't really allow it to move more than 2% in a day. I don't know if that's to the upside or downside or just one or the other. Do you guys know anything about that?
I'll tell you, there's no cap on the downside. I can guarantee you that.
Yeah, that I would figure that much. So
I'm sorry, there was a cap on what now?
I don't know where I heard it and what exactly they were talking about, but I'm pretty sure it was referring to gold spot price and its movement being limited to, or like I said, I don't know if it was market makers controlling it. If they don't like to let it move more than 2%. And I haven't gone back and looked at each daily candle to test that. It was just something I heard. And as we were talking about the silver moves, it was something I figured I'd bring up in question to you guys who might know something about that. So.
I don't think that's true, because I can think of just Brexit alone. When they did Brexit, gold was up like a couple $100 or $100 or something on a single day. Just looking right here in COVID, this was a good example here. Gold was up 5% the second day from the bottom, up another 5% the third. So I'm not sure about that. Let's see, when was Brexit? When was that vote? When was it? June 23rd, 2016. All right, let me check that out, because that was a big move that day. Let's see.
Yeah, on gold, I mean, I could see the argument that there could be some players with short positions that would eventually want to try to put a cap just on the upside so it doesn't get completely out of hand. I can see that, but it's such a big liquid market, and so many players are in that market with different time horizons and different intents. I just think that like within gold, you get a lot of legitimate profit taking. Like there's a lot of people that just want to take profits for different reasons after like 4 or 5% in a day. It can definitely go up much more than 2% in a day because that's happened a bunch. But I don't know. I try to stay out of just like the conspiracy theory line of thought too much on this stuff. I think you make a credible case that there's just legitimate profit taking that happens in gold at 4 or 5%.
Yeah, on Brexit, it was a 9% move that day.
Well, actually, what may be helpful, Jim, can you answer that one? So, if somebody was long a gold contract and it went up 4 or 5% in a day, how much money would they make? Because I think we kind of underestimate just like the players in the futures market. They're not making just 4% on these contracts.
A gold contract is a 100-ounce contract, so every dollar it moves is a $100 swing. And if you're wrong, it's $100 against you per dollar. If you're correct, it's $100 for you. And silver is a 5,000-ounce contract, so every penny it moves is $50. Every 10 cents is $500. And if you're on the right side, it's $500. It gets credited to you per 10 cents. If you're on the wrong side, it's $500 getting debited from you.
So it would be pretty. Just to put it in perspective, a 5% move from right here would be $83 to the upside.
So you're saying there's some incentive to take profits there?
Well, Austin, not if it's going to 3,000.
But I think what you guys are talking about is most people put up a very small amount of margin. And I found it interesting in talking to Jim that you actually need less margin to control more gold than you do silver, just because silver is more volatile. Jim, what was it again? It was like 8,000 of margin to control the gold contract, which when we talked about it was like 170,000, but you need like more than that to control the silver contract. Something's fair.
The silver margin, I believe, now is $9,000, and the gold margin, I believe, is $6,250 per contract.
Yeah, so it's less margin. And how many ounces of gold was the gold future?
The gold contract is a 100-ounce contract, Hutch, and the silver contract is a 5,000-ounce contract.
Yeah, so you're putting up less margin to control 160,000 versus more margin to control less than 100,000.
Yeah, pretty interesting. Pretty interesting. Yeah, I don't know. You know, I keep being on the fence about the futures thing, but you know, if it starts selling back down, then you know it starts looking better for me because you know that's kind of when you want to buy, right? Not to think about it.
This space really made me realize I've been buying gold and silver mainly off friends' advices, but I myself haven't done really much research on it or on seeds and things like that as well. But this really opened my eyes, so I appreciate you guys talking about.
Yeah, sure thing. We're glad you came in. I see you're really big into crypto and stuff, so you know that's cool too. You know, I mined Ethereum back in 2015, so I had a lot of fun with that. Not 2015, 2017, excuse me.
I try to diversify. I've learned.
It's good to see you here, Edith. It's been a while. Or June in Austin in person.
It has. I'm actually got into this space. I saw you in it, and I was like, he always has some knowledge. Let me pick it in here, and I've been granted some knowledge today. I'm looking forward to researching some of these tickers you guys named off today.
You know what? I learn a ton from these guys all the time. I love coming in this space. These guys are on top of what's happening with the economy, and they're kind of the canary in the coal mine for me. There's some really shady shit going on worldwide and with our country, and it's listening to these guys is how I stay ahead of it.
Appreciate the kind words, Hutch. Edith, just to reiterate, if you go through the nest there, I've got that video there with Don Durrett, and he covers a lot of the tickers, and he talks about them, so you can listen to his opinions on them and the fundamentals of the companies, the ownership, the resource that they've got. I mean, he's one of the best in the business. It's 4 hours of data, so if you really, 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 truly want to get in there, that's the place to go for sure.
Thank you for doing that.
And it's timestamped. It took me a long time to timestamp that stuff. So.
That's big. That's a lot of work.
Alex, did you have something, buddy?
No, I'm just a little exhausted from work all day, but it's been great. Just kind of hanging out, being in the room.
Yeah, I think we had a good space here. We'll go ahead and call it. And, we do it every Saturday, 7 o'clock Central. So you're welcome back next time. We will have Don Durrett back, speaking of the devil, here in the next 2 weeks, I think. So be sure to come in for that. That guy is great. He takes all your questions. He answers everything. So, he's a great guy to have on. But meanwhile, we'll stay on top of it, and we'll be looking forward to what happens this week and beyond. So everybody, thanks for coming in. Thank you, everyone, for contributing, and enjoy the rest of your weekend. Safe travels. Happy trading.